Well, we made it through. We worked our way through technical analysis, through fundamental analysis. We went over our beginner entry system. We now know our advanced entry system. So we need to tie it all together with understanding how to build a trading plan. This is going to set you on the right step going forward when you start trading with a demo or a live account, when you start putting your foot into the actual market. The most important pieces that you want to put into your trading plan, number one, would be the time of day that you're going to trade and the days of the week that you're going to trade. For me, like I told you, I'm on the charts from 6 a.m. to about 10, 11 a.m. every single day. You also want to include in this plan the exact entry signals that you're going to use during those days and times that you're trading. The stop loss should be detailed. The take profit should be detailed. The exit signals that go into this system should also be detailed in words in your trading plan. You need to also have the risk management and rules for every entry signal written down in words in your trading plan. The risk management should be predetermined. If it's a shift candle, you should know where the stop is going to be. If it's a 2-candle formation, you should know where the stop is going to be. And you should know how much you feel comfortable putting on those trades. For me, like I told you, with the beginner system, I'm looking to do less than 1%. With the advanced system, I'm doing 1 to 3% of my total account balance on those trades. And last, you want to make sure that you have a solid mental approach detailed, a solid routine for every single day detailed in your trading plan. You want to have balance in your life. It's very important if you're really trying to succeed here in the long run. You can't just jab at the markets for 7, 8, 9, 10 hours a day. It's not going to end well for you or your bank account. So what you need to do is detail your mental approach. Detail what are you going to tell yourself every morning before you get to the charts. I actually have morning affirmations that I read to myself every single morning before I begin to trade. It puts you in a positive mindset because you're going to become the environment that you spend the most time around. You're going to become the people that you consume the most content from. So you want to make sure that you're filling yourself with positivity, filling your environment with positivity, and putting yourself in the right mental space to actually make money, to actually succeed. And that goes into building a detailed routine in your trading plan. So when you have this whole thing written out, it should say, when are you trading? Why are you trading those days? Why are you trading those times? It should also say the exact entry and exit signals, the stop loss and take profit, and the risk management that you're going to apply to each signal. Detail it with bullet points. I don't care. Whatever your brain says, the way it makes the most sense to you, you want to detail all of this and especially have the risk management predetermined. I don't care if you want to try to feel it out at first, but once you're ready to turn this on with real money and take it seriously, when you put real money into the market, the risk management must be predetermined. You must know if it's a shift candle, I'm going to risk 2%. If it's this 2-candle breakout formation with a TDI confirmation, I'm going to risk X%. You need to have that built into the plan before you ever start to trade. Now, there's 3 steps that are going to lead you to success, I think, for anyone as a Forex trader, whether you're new to the market or not. You always want to start with a demo account. I know a lot of people out there will say demo accounts aren't real. They don't, have that emotional piece that the market really does. That's fine. But I think to anyone that's coming into this industry, to anyone that's coming into a new skill, you're going to make mistakes. You're going to click buy when you meant to click sell. You're going to enter an order size that might be wrong once or twice. That's part of being a beginner. So start with a demo account so you don't make those dumb mistakes with real money. You're going to feel stupid. The second piece, and I can't stress this enough, is you only want to trade with money that you can afford to lose. A lot of people will ask me all the time, how do I start making $100 a week with trading? I'm like, that is so dumb to ask me that. You should be focusing on how do I find the best probable trade setups every single day. You want to make sure that you're trading with money that if it was to blow the entire account because you get greedy or you over leverage or you do whatever you do, that you could still pay your rent, still pay your bills, still live your life, and then come back and survive. And I think that can be taken a step deeper to understand that I've seen more people quit their jobs too early and fail at trading because they quit those jobs than I've seen people quit their jobs and just take off in trading and become a multimillionaire. Very few people end up that way. More people will quit too early, right? Because they think that they are ready to go full time and start trading with money that they can't really afford to lose, then having to only go back and get that job. Then you'll see people instead on the other side of that, wait, actually work a job while they're still making money trading, and then make the decision, okay, I'm making enough money trading and now I can rely on it full time, and I'm not trading still with money that I, can't afford to lose. The final piece that we want to make sure you understand before you jump into the market, before you jump into this, is that you want to study, journal, and continue to push yourself to learn about the markets every single day. If you're not journaling, if you're not documenting what you're doing every day, you're going to have no accountability to the actions that you take. And I think that was a big issue for me, is that I wasn't journaling my trades. I would take a small position and be like, oh, it's just a test. It doesn't matter. Yes, it does. You lost or made real money. It definitely matters. You need to journal, and it'll help you be accountable, because you'll look at your P&L at the end of the day and you'll say, why did I do that? The journaling will make you more self-aware. And I think that's a huge characteristic that a lot of traders lack. So to increase your self-awareness, every day, give yourself 20 minutes and write about your trading that day. Journal your trades that day. Now, there's 4 things I wish I knew when I got started that I want to share with you guys. Number 1 is don't force yourself into bad trades. Trading small size into bad setups, B setups, C setups, where the liquid 50 is swapping and ADR is already maxed out. Sizing down into that trade is there is no reason to take a trade that is a bad setup. Whether it's small money or big money, it is still real money. You don't need to trade every day. You don't need to force those trades. So wait for better setups. I hate when I see people telling me, oh, it's a bad setup, but I'm still going to just trade it small. No, just stop being such a greedy human being. Let the trade go. If you're right, great. You analyzed it well. Move on. You'll see it again tomorrow. Find better setups. You do not need to force yourself into bad trades. Number 2, don't risk more than 3% on any one trade. I've seen a lot of traders blow themselves up by adding more leverage and adding an increased percentage per trade, risking 5, 6, 7, 8, 9, even 10% per trade. Those traders inevitably will blow their account. They might win 2 or 3 in a row, but they're still going to end up getting greedy, coming back, losing, and then FOMO kicks in even more because they've now risked more. So now they feel like they're missing out on every other move more, and they're sizing up even bigger, and it's this negative death spiral that traps a lot of new traders. So just from the jump, keep your risks small. Number 3, don't use brokers that offer unrealistic leverage. I've lost a lot of money when I first started because no one told me that. I didn't understand what leverage even really could do for me, and I was wondering why I was just losing and losing and losing. And it was because I was over leveraging. So understand that with those unrealistic leverage options that are available from some brokers comes unrealistic expectations on your returns. You want to make sure that you're reeling that in, reeling the greed in, and living here on planet Earth. Be realistic with what you're trying to do. This is a business. You're not going to get 100% returns every single day on your trading. There's no possible way. So cut it back, keep it realistic, and you're going to find a lot more success. It might seem as though it's going to take you a longer period of time to do that, but in the long run, because of the money that you'll probably blow with the unregulated brokers, with the unrealistic leverage, you're going to be better off going with the regulated broker, going with the lower leverage, and building the account slower over time. And lastly, don't watch charts all day long. You want to check if setups fit your plan and move on. I can't stress that enough. More often than not, I will see people make money at 5, 6 in the morning, but give it back and be negative by 4 or 5 p.m. because they can't just take the winner and move on, do it again the next day. It's that simple, guys. You wake up, you trade, you look for charts, you trade, and you get off the charts and go on with your life. Do analysis, do studying. You don't need to get off the charts as far as studying and learning and reading trading books and watching YouTube videos and talking to other traders, but get off the market. Make money, get off the market. You don't want to stick around to give it back. Lastly, I have some advice for a younger me that I hope you could take seriously. Number 1, I would tell myself, don't compare yourself to other traders. Every trader is going to make money in their own way. I spent a lot of time looking at Instagram, looking at social media, and seeing other traders do things. And it took me a long time to realize that most of them were just either photoshopping the results or just talking, trading demo accounts. I was getting sucked into these people that were selling me this fantasy, selling me this dream life, and not being realistic at all. I was comparing myself to them, and it was beating me down. So literally block people on social media. Don't look at anybody else on social media. Focus on yourself, learn from other traders, be open-minded, be willing to learn from other traders, and never assume that you know everything. The second you assume you know everything is the second you're going to get smacked by the market. I said it in the beginning. I said it in the sales script to this video. I know what I know, and I know what I don't know. Sticking to that mantra has helped me very, very much. I stick to what works for me. I don't compare myself to what other people are doing or how much money other people are making. It doesn't matter to me. All I care about is me and my personal growth. And that goes back to journaling and really doing a lot of hard work on your own. You, at the end of the day, while we all are a team, you've gone through our course, you're now a part of our VIP chat, you are still on an island when you're clicking the button. So it's hard to not compare yourself to other people, but you have to remember, you're the one that's going to pay your bills. You're the one that's going to feed your family. So comparing yourself to other people is literally wasting brain energy that you should be devoting to yourself and your family and your success. Another piece of advice is to cultivate a positive environment around you. You really do become who you spend the most time with and the books that you read the most, the content that you consume the most. So you want to make sure that when you're listening to podcasts, talking to people about trading, watching YouTube videos, all of it should be positive focused. You should only be keeping people around in your life that are positive about your trading and positive about your trading business. If people want to talk smack, don't talk to them. Don't waste your time trying to convince them. You'll just, again, waste brain energy that should be focused on you studying the charts and learning how to become a profitable trader. Keep positive people around you, even if it means keeping less people around you. Your circle doesn't need to be super big. It could be small for you to still find success. If anything, the people with smaller circles more often than not do find success compared to people that are spending all of their time trying to appease other people. So find people that are positive, find influences that are positive, and keep them close to you. I have a lot of people that their families don't support what they're doing in trading. It might be you. And I tell them what? Listen to me, listen to Gary Vee, listen to other motivating people online that are telling you to trust your gut, to stick to what you believe in, because nobody knows what's best for you except you. So keep people around you that cultivate that kind of positivity out of you. And lastly, and this is big, and I still practice this every day, focus on what you can control, not what's out of your control. People will ask me for weekly forecasts, daily forecasts, all these forecasts. Those things are out of my control. All I can do is wake up every day, analyze the charts to my best ability. After using everything I've taught you in this course, use those skills to analyze the charts every day and focus on what's in front of me. I don't set monetary goals for next month. I don't set monetary goals at all. I trade good trades that present for me every single day because I've seen enough in this market to know that I don't know what's coming tomorrow. We could see huge spikes tomorrow. We could see the volatility drain tomorrow. Anything can happen. So all I can do is focus on what I can control. I can't control what happens with other pairs and volatility and volume. I don't have any control over that. All I can do is wake up every day and trade the market that's in front of me. Build a good routine. Keep positive people around me. Make sure that I am my best self when I show up to the market. That's what I can control. Being in that mindset, being in that atmosphere around me will only then lead to positive results in the market. So I want to thank you, really, I mean it very much, for moving through the course with me here. I know it was, a little bit repetitive in some parts, but I want you to understand that even though it's repetitive, each trade is unique. So spend some time going back, rewatching Chapter 6, rewatching Chapter 7 especially, going through those chart markups. And as always, if you have any questions, if you go and do any chart markups on your own and you want feedback from me, please email me, send me a message on Telegram, Instagram, Twitter, wherever you can get a hold of me. I'm always there to help you. Thank you again, and I will talk to you in the group chat.